welcome to the Q&A Monday. So it's 5 p.m. every Monday. My name is Hannah and I help people to have the lifestyle they desire and still pay the right amount of tax. So today's topic is about national insurance. Actually, when people say national insurance, perhaps some people don't really realize it, or when we talk about different classes of national insurance, and people saying it's a lot of jargon and it's so complicated. But let's face it, majority of the people, you do have to face national insurance at some degree. Okay, so one of our previous episodes when we talk about payroll deductions, one of the deductions is national insurance. So majority of the national insurance are used to fund by state benefits, like your state pension, as well as maternity allowance, or when you lose your job, you have the unemployment allowance. So these are sort of indirectly benefiting you or sort of benefiting you from long term. So, but of course we perceive it as a payroll deduction. That's some money gone from your account. But there are actually a lot more detail than just that payroll deduction. So today we're gonna talk about, to start with, let's just see when you have to pay national insurance. What kind of earnings that triggers national insurance? Okay, to explain everything, so this cash flow quadrant, I think it's always useful for me to explain everything, and it can be very understandable. So on the left hand side, we have employee, and here we have self-employed, and business owner and investors. So perhaps you already know, if you've been following my episode, you already know what does that mean and what are the tax implications. But today, if we talk about national insurance, so for employees, you have to pay. So what are the payroll deductions? What's the deduction on your payroll? That is actually the class 1 national insurance. Okay, so that's employee. And if you're self-employed, so there will be two kinds of national insurance that you need to pay. One is class 2 and the other one is class 4. So I write it down like this, probably it's clear. So basically two kinds of national insurance you have to worry about when you are making a profit. Okay. And if you're the business owner, it doesn't really free you up from the national insurance, because if you are running a business, you're hiring employees, again, it comes back to here. So class 1, you have to know about class 1, not just you have to know what are deducted from your employees' pay, but also there's another secondary class 1, that is employer's contribution. It's like employee will contribute some and you have to match some. So if, say for instance, if you hire the employee and annual salary is 20,000, but your actual payroll cost is slightly more than that, that is because you have to contribute that employer's national insurance on top of the gross pay. Okay, so as a business owner, you do have to look after your employees. So that is why you have to know about, take care of class 1, the main class 1, as well as the secondary contribution. As an investor, here, like investment income, things like stocks and shares, like dividend income, or when you sell assets, or if you rent a home, so these don't trigger any national insurance. So luckily, I don't see any income from these quadrants, like rental income. I don't see any of them trigger national insurance. So this will free you from paying national insurance. Okay, so as we can see, most of the quadrants, you have to pay some sort of a national insurance. That is why we do have to face it. Most people, we do have to face it. And also one thing perhaps you realize, we have class 1, we have class 2 and class 4. So is there such thing as class 3 national insurance? Yes, there is, but not very common. Class 3 is voluntary contribution. So, for instance, if you don't pay national insurance, or if you're investor, but you want to contribute national insurance for some reason, mostly because of your state pension, then you can voluntarily pay national insurance as class 3. Okay, so again, how does that work? I think perhaps there are lots of figures and thresholds you can find on internet. Let me just briefly go through what are these. So as class 1, currently if you're earning less than roughly that's £8,000. Under £8,000, well, to be precise, that's 8,164. I just need to make sure the number is correct. 8,164. But for the sake of the communication from the video, let's just round it up as 8,000. Okay, so under that, you don't have to pay national insurance. But as employee, when you're earning above that, then that's 12% until you earn up to 45K. But after 45K, that's only 2%. So from the previous episode, we mentioned when your earning goes up, the rates actually go down. That's a time actually when you have multiple jobs. It needs to be careful that to watch out for if your overall earning is more than 45K, and if each of the job is under 45K, but if everything is collected as 12%, so you probably overpay the national insurance. So do watch out for that. For this class 2 and class 4, so if you're self-employed, perhaps you are familiar with it. Class 2 is a flat rate contribution. So that's £2.85 per week. So it's on a weekly basis. But again, as a self-employed individual, you do declare your income through the self-assessment, that's your personal tax return. So that's the time we will declare how much class 2 and class 4 you have to pay. And it's the same deadline as you pay your personal tax. Okay, so if you're self-employed, you're probably familiar with it. Like on your tax return, you will have the tax as well as the national insurance. So you have to pay them all. Okay, so by the way, if it's based on the profit. So if your profit is less than currently is £6,000, then you probably don't have to pay class 2 or even class 4. So there's a small, if your profit is very small, and you don't have to worry about it. But if you're making a good profit, yes, both class 2 and class 4 are applicable for you. So class 2 is a flat rate. And how about class 4? So class 4 is the same, exactly same threshold as class 1. So 8,000 as well as 45. So between 8,000 and 45, that's 9%. And above 45, that's 2%. So that is, again, collected based on the profits you make. So class 2 and class 4, that is also the point why when people start making profits from their sole trade, their business, they start thinking of forming a limited company because they can avoid both national insurance by transferring the business to the limited company. Yeah. Again, at that point, they have to worry about this class 1. Okay, so yeah, basically class 2 is a flat rate, and class 4 is like 9% and 2%. But just for your information, it is likely that in the future tax years, class 2 will be gone, will be abolished. But then the government is going to put the class 4's rate up to perhaps you will say class 2 is abolished. That's a good news. You don't have to pay that. But class 4's rate will go up to replace that benefit. So need to watch out for that when you are planning your business and planning your finances. Okay, so what if you decide to incorporate and you're a one-man band company and you decide to take salary from the company? So yeah, this time, if you're taking more than 8,000 a year, yes, you have to think about class one. You have to have the main class one contribution as well the secondary contribution. So the secondary contribution is 13.8%. That's paid on top of your gross pay. Okay, so the other note about one-man band company or only director company, it's actually a very common asked question. It's like when they receive the pay slip at the beginning of the tax year, perhaps very, very little deduction. But when the tax year goes by, perhaps towards the end of the tax year, they start having more and more deduction, especially the national insurance deduction. Why is that? Okay, so the way directors pay the national insurance are very different from their employees. So normally, if you're the like normal employee, month one you earn £1,000. As we know, the overall national insurance threshold is 8,000. So when you are the proper employee, and when we are calculating the payroll deductions, so month one, they actually use that 8,000 for the year, the threshold for the year divided by 12. So they use it as a month one basis. We call it month one basis. That is why at the beginning of the year, you start having some national insurance deductions. But when you are the director, it's different. Your national insurance is calculated on a cumulative basis. So the first month, you only take £1,000. So that is under the £8,000 threshold. So there's no deduction. But towards the end of the tax year, then your accumulative salary is above 8,000. So that's the point you start having more and more deductions from the national insurance. So that is the reason why when you start at the beginning of tax year, you don't have much deduction, but towards the end of tax year, you have more deductions. Okay, and the other note about business owners, if you are hiring proper employees, as we know, I mentioned about the employer's contribution, like the secondary contribution. There's one thing, actually, it's a way that government supporting the small businesses to hire more employees. That is, most small businesses, you qualify for about £3,000 a year employer's allowance. That is, you can save, you can deduct up to £3,000 in the secondary national insurance. So yeah, that is basically, as we know, the employer's contribution is adding up on top of the gross pay. So that's if the government is giving you £3,000 exemption, so that is the time you can save about £3,000 a year. So if you are outsourcing your payroll, or even if you're doing the payroll yourself, make sure you double check on this. Most of small business, you do qualify for this, but this will, I think in the past, if you are the one-man band company, you can still benefit from it, but now you cannot, because one-man band company, you have way too much tax benefits. So if you're the only director company, unfortunately, that employer allowance doesn't apply to you. But if you're running a proper small business, then it is very likely that you qualify for it. Do double check with your payroll bureau, your accountant or advisor. Make sure you do save money as much as you can. Okay, so basically today we run through different kinds of different classes of national insurance and when you have to pay them, and what you need to watch out for, So I hope you find this useful. I think there are lots of details around national insurance. If you do have any specific questions, please be free to ask me. I am also on Facebook. So if you haven't joined my private Facebook group, please do so. It's called Tax Deductible Lifestyle Tribe. So I will put a link below, and if you are watching on the YouTube, I will put the link below as well. So be free to join. You can connect with me, ask questions, and also you can connect with our panel of experts. So we have financial experts as well as business experts who can help you to earn more money and grow your wealth. Okay, again, I hope you find this one useful. I wish you have a wonderful evening. Enjoy the rest of your week, and I shall see you very soon. Bye now.